Hello everyone, my name is Jabamiani and I'm going to teach you the financial accounting subject. Don't forget to subscribe my channel and press the bell for more videos. In today's video, we are going to study three important types of accounts, which are real account, personal account, and nominal account. Real account cover the entire assets of the organization. As you all know, we have two types of assets within the organization. The first one, which we call the intangible assets, or those assets which are physical or we are able to touch them, for example cash, furniture, car, building, land, and etc. But from the other side, we have assets which do not exist physically or we are not able to touch them, such as goodwill, for example right of using a license. Also personal account are related to the individuals, firms, and business entities who are dealing with our organization. Mostly within the personal account, we record two important types of account, which is capital account or owner equity, and liability, which cover the short-term loan, long-term loan, and creditors. Nominal account, which is related to our expenses and revenues. Since these accounts are nominal, at the end of each financial year, we are going to close these accounts, and it means they do not appear in the annual financial balance sheet. Here we are going to have a look on rules of debit and credit for real accounts or assets. For recording a transaction related to assets, when there is an inflow of assets within the organization, in other words, if there is an increase in our assets, we record them in debit side. But if there is an outflow of assets or any decrease in our assets, we record them in credit side. You have to notice that in double entry system, always each transaction has two effects. One side is debit and other side is credit. For better understanding of this example, for better understanding of this rules of debit and credit, it is better to have a look on this example. On 5th of August, purchased office furniture for cash $10,000. Here we have two types of assets in this example. One is furniture and other is $10,000 cash. Cash is also our asset, furniture is also our asset. When we purchase furniture, it means this furniture is coming within the organization as asset. It means there is an increase in the assets of the organization. So this furniture should be recorded in debit side. But from the other side, when we pay this 10,000 USD for purchasing this furniture, since this cash is also our asset, and when we pay this 10,000, it means there is a decrease in our assets, so we have to record this in credit side. For example, in this journal, from one side we record furniture, debit, how much? 10,000 USD, and also the cash which we pay for this to cash, how much? 10,000 USD. Purchased furnitures, for cash. This is a real transaction which we record in journal. The second example, purchased office supplies worth 3,000 USD from brothers company on account. Here see, we have purchased office supplies. This office supplies is a kind of asset which is coming within the organization. It means there is an increase in our assets. So our office supplies should be recorded in debit side worth 3,000 USD. Office supplies, how much? Debit 3000 USD. From the other side, since we are not paying the cost of these office supplies in cash, we purchase this office supplies on account, it means in credit base. So a liability is created here for worth how much? 3000 USD. So we record this account payable, for brothers company, how much? 3000. In narration or in description we will write purchased office supplies on account. So it is better to understand that when we record the general entries, when we purchase assets on credit base, here the account is created as liability, which is credit amount 3000. One more thing you have to consider, that always in journals your total amount of debit and credit should be equal. Okay, thank you very much. I hope you understand, and don't forget to subscribe the channel for more videos. Thank you very much. Have a nice day. Goodbye.